For more on finance, we're joined by Rod North, Executive Director of Bourse Communications. Good morning,
Good morning,
Rod.
Karina and Michael.
And it's all about interest rates today.
Yes, it's all very tense, isn't it? And I think that, of course, the market's really expecting that the Reserve Bank will lower the cash rate by 25 basis points today. Although I'm thinking it may not be a complete lay-down misère, because the landscape sort of changed a little bit with respect to the position sort of late in 2011, when we saw a drop in rates in November of 25 basis points and again in December. But since that time, we've seen a little bit more stability in the equity markets this year, and we came through with some pretty good results from the US on Friday, when we saw the US unemployment rate drop from 8.5% to 8.3% and see something like 240,000 jobs created. So I think we've got to be conscious of the fact that the Reserve Bank board members will be looking at a lot of these extraneous factors in the decision that they make. And also, you know, when you look at sort of odds and historical statistics and so forth, if we get a drop in the cash rate today, that will be the third consecutive drop, which hasn't happened for something like 10 years because there's no January meeting. So I don't think it's a total lay-down misère, although there are sufficient economic data that sort of shows that it should be certainly on the agenda at some point, whether it's today or whether it's next month.
And again, the bankers are at war with the government over whether they should pass on in full any rate cut. David Murray, as you know, a former head of the Commonwealth Bank, now chairman of the Future Fund, has told AM on ABC Radio this morning that Australian banks risk going down the path to potential financial crisis faced by European banks unless they're allowed to manage themselves properly, basically shorthand telling Wayne Swan and others to get their hands off the banks.
Yes, and I think that we've been focusing on that, and the signal was really sent, the smoke signals went up sort of late last year when we had those two increases where the banks, you know, were largely forced to pass on as much of that rate decrease as possible. But there's been lots of signalling about the fact that, you know, banks are under funding pressure. But, you know, there's also the argument that banks are also making extraordinarily high profits as well, and of course they've got to have a loyalty to their shareholders. But we're still sort of in the residual effects of a global financial crisis, and I think there's sort of a bit of a moral obligation too for banks to sort of weigh that up as well. And of course, you know, quite apart from the sort of opposition that they get, you know, in the streets. I mean, there are a lot of people still out there struggling to pay their mortgages, and of course the biggest concern, I suppose, is the outlook for unemployment here too. We've got a rate of sort of 5.2%, but most economists and commentators are tipping that that unemployment rate, you know, could go up a little bit more as the year progresses. And when you see sort of retail figures that came out yesterday that actually showed a decline of 0.1% in December, which is actually one of the most significant times for retail, that sends you know, significant concerns, I think, through the market, and it actually puts a lot of those jobs in retail, you know, in a position perhaps where there could be some uncertainty there going forward.
No doubt we'll hear a lot more about interest rates over the course of the day. We'll move to the markets, and the market went up despite those soft retail figures that you mentioned.
Yes, it did. We had a 1% increase yesterday, so a very solid gain in our share market yesterday. That was really sort of following the lead from Wall Street from Friday. I mean, Wall Street's come off a bit, you know, overnight. So, you know, our market today is probably going to be fairly flat, and I think a lot of it will be sort of looking at the outlook for, you know, what's going to happen with the Reserve Bank. But I think one of the key things we've got to look at this week is when the RBA puts out its quarterly monetary statement on Friday. I think that's really going to tell us what they're really thinking in the current market. But I think there's no doubt we're going to see rates come down. It's just a question of when, but it may not be today.
Rod North, thank you very much for joining us.
Thanks very much.
Thank you.
Coming up, we'll bring you a story about calls for a crocodile census